And now it's time for Development Debates, where we dig deeper into some of the questions shaping the future and present of China. Today we will see two Chinese experts debate if China's bear stock market will continue. The bear stock market in China has been around for years. The government provided over 4 trillion yuan in economic stimulus plan to fight the global financial crisis in 2009. This plan boosted the stock market, seeing rapid increases. However, the uptrend only lasted a short time. Then it started to plunge. Now stock markets in other countries have returned to previous levels before the 2008 financial crisis, but it seems that China is an exception. Yet this situation has started to change in China. 21st Century Business Herald reports China's stock market saw a nearly 9% increase from the end of July to mid-August this year. The 9% increase is higher than increases seen in other stock markets around the world during the same time period. Some believe China's stock market will soon return to the pre-2008 financial crisis level. Financial commentator Guo Shiliang believes China's stock market will keep rising. Guo said the government implemented 4 trillion yuan economic stimulus plan boost stock market helped the increase. The stock index doubled from more than 1,600 points to nearly 3,500 points in 1 year. He mentions this year China's economy growth rate might be below 8%. And this would be the lowest rate compared to the previous years. As a result, the government has announced to implement a new round of stimulus funds to stabilize the country's economy. Guo said that this would encourage China's stock market to increase. Apart from that, Guo also mentioned that the country's cooled down real estate market would encourage investors to put their money into the stock market. He cites data showing that from January to July this year, investment in real estate market continued decreasing. Previously, when housing prices saw rapid increases, investors would earn more money in the real estate market than in the stock market. But now, because the country's decreasing housing prices, these investors might return back to the stock market. Another financial commentator, Zhang Tingbin, doesn't agree. Zhang writes that previously the government prefers large-scale infrastructure constructions to sustain the country's GDP growth. Getting financing from the stock market is a major way to do this. But Zhang does point out new leadership has already announced they can tolerate a lower GDP growth rate. Therefore, the government wouldn't use previous methods to boost the economy. So the country's stock market might not be as important as before when considering financing. Apart from that, Zhang said the country's lagging stock market has made it less appealing for investors. The government's regulations have turned China's stock market into a means of transporting money to the government at a low price. Whereas in developed countries, the stock market does not work in this way. The crucial function of the stock market of helping companies get financing with low costs. Also to encourage quality. Zhang explains if the government cannot prevent these corrupted loopholes, China's stock market will never see the end of its bear market. Both Chinese experts and government officials agree that previous economic development styles are no longer suitable for China. Large-scale investment will have less impact on the country's economy. Developing the country's stock market could be an alternative. But the problem is how the government will reform the current system and encourage Chinese investors to put money into it.